We're on Eurowatch again this week because, frankly, things still aren't really improving. But while the zone and the currency aren't perfect, the cost of any breakout would be unimaginable. We're talking a worst-case scenario of civil unrest and the imposition of authoritarian governments. At least that is all the view of the Swiss bank UBS, whose global economist Paul Donovan dropped by the studio earlier in the week. We began by chatting about the Eurozone's current hotspot, Spain.
There's a problem. There is a problem with Spain's debt structure. It's very short maturity. And what that means is Spain keeps having to go back to the market and saying, can you give us another loan, give us another loan, give us another loan? And the market at the moment is inclined to say, actually, we'd really rather not keep on lending you this money.
Fair enough as well.
Well, indeed. And then we've got the second problem, which is the banks. Now, the Spanish local banks, what are called the Caja, are not really in the best of health, to put it mildly. And we think it's going to cost somewhere between 10-15% of GDP to bail them out. Now, all of this is creating nervousness in the markets. There's uncertainty about the ability of the Spanish government to handle this position. And then there's the growth numbers. And the growth numbers in Spain are absolutely awful at the moment. And you've got unemployment, over 25% and 52% youth unemployment. It's getting worse and worse, and that's the problem.
And on the unemployment side of things, what's leading to what? Is it the bank problems, the debt problems, the lack of confidence is leading to that, or is it chicken and egg thing?
Well, it's a combination of the fact that the banking system isn't prepared to pass on any monetary easing. When a central bank changes monetary policy, what you need is for the normal banks to take that and pass it on to the consumers. The normal banks sit in the middle. Well, that part of the process is broken. So it doesn't matter that the ECB's interest rates are low. It doesn't help in terms of the Spanish economy. And then on top of that, we've got Chancellor Merkel of Germany crying out in this strong voice, we must have discipline, cracking the whip and demanding that the Spanish cut back on their budget deficit. And that, of course, is also a negative for economic growth. So we've got these two forces working together, and they're creating this unemployment problem in the Spanish economy.
Right, you've mentioned Angela Merkel, who I wanted to come to, or at least I wanted to come to Germany via France, because we've got this election situation in France.
Yeah.
There is a very good chance there could be a change in leadership there, and Francois Hollande has already said he's got a few words for Angela Merkel about the way the Eurozone is going, or at least how this leadership between France and Germany is going.
Yes.
The balance, does it change? Can it potentially change there again?
No, I don't think it can change that much. I mean, I think there's a couple of things. Hollande has been making all these promises. I'm going to do this, I'm going to do that. He's a French politician. What they say and what they do are two entirely separate concepts.
I'm glad you said that.
He's not going to come in and be able to do half of what he said. He can't renegotiate the Stability Pact. It's done. It's enshrined in law. He can't renegotiate the growth mandate for the ECB because that requires 27 countries to agree. He doesn't have the power to do what he's saying he's going to do.
But just the way that France and Germany have taken the lead, we know that they have been the driving force behind everything that's happened, reactionary at least to the Eurozone problem. You change the leadership, you bring in someone who's got a lot more talk like that, surely it's got to upset the balance a little bit at the top, especially when you've got, as you say, a very strong force like Angela Merkel as well.
Well, I think what we're going to get is a frosty silence at the top, because, of course, Monsieur Hollande is not Angela Merkel's chosen candidate for French president. Her chosen candidate was President Sarkozy. So if Monsieur Hollande wins, then there's certainly going to be a certain froidure at the top of the European politics. But I think more importantly, the balance of power in Europe has already shifted, and it shifted earlier this year. With the French downgrade, very visibly, France has seen its influence be reduced in the Eurozone. And whereas France and Germany used to be sort of equals, two sides of the same coin, and they'd act as balancing forces to each other, I think the balance has now tilted, and France has lost political influence within the Eurozone, and Germany has gained it. So even if we do get Hollande coming in and saying, I want to do this, I want to do that, I think France's position in the Eurozone has diminished over the course of the last year or so.
What about the case of the whole Eurozone itself? For a while there was all this sort of talk, a possibility of a two-tier Eurozone, put the southern countries down there where they're causing all the problems, leave them out of it and all that. Is that still crystal ball stuff, I know, but...
It's not possible, basically. We have two alternatives for the Eurozone as we go forwards. If we take a long-term view, what we have today is completely unworkable. The euro does not work. And this is not a surprise. Economists spent all of the 1990s saying the euro will not work. Economists were ignored. Bad things happen when economists are ignored. I think we can learn a lesson here. So what we've ended up with is a completely unworkable situation. Now, there are two solutions to this starting point. Either the euro breaks up. The euro breaking up would be an unmitigated disaster. You are talking military governments, you're talking potential breakup of countries, you are talking economic chaos.
And so it's not really an option, is it?
It's not really an option, although, never say never, but I think it is the absolutely horrendous scenario, and not just for Europe, for the global economy.
Right.
The alternative is integration, and that, I think, is what we need to see. Europe must integrate more and more. We need to see the Eurozone adopt a single approach to its banking system, and we need to see the Eurozone adopt some kind of fiscal confederation over time, some kind of shared fiscal policy. Every single monetary union that has ever survived in the last 2,000 years of history has had some kind of fiscal integration alongside its monetary integration. That's where the Eurozone has got to get to.
Final thought for you then, Paul, and it's a little bit abstract, but I'm going to go with it anyway. We've invited you here. We're a business and economics show. We want to hear what you've got to say about the global economic situation. Does that reflect what happens to you in real life if you go to a gathering or something like that? Are people wanting to know, hey, are we going to go into recession again? Is it that bad? And I mean, are people talking about this on an everyday level?
To be honest, the question I normally get asked if I'm going out to dinner or whatever is, is now a good time to convert my money because I'm going on holiday to America next month, or what's going to happen to house prices in the United Kingdom? Because, of course, that's what most of my friends are most concerned about.
So that's the everyday life. That's what it comes down to for
Exactly,
everyday people,
yes.
isn't it? Paul Donovan, pleasure talking to you. Thank you for your time.
Thank you very much.